Across the borders in the world of business, Toyota nearly doubled its operating profit in the first quarter, helped by increased sales and higher production volumes, as well as the tailwind from the weaker yen. Sales volumes across all regions increased compared to the same period a year earlier due to productivity improvements. Here now are the details of this and other stories making headlines across the globe.
Toyota, which is the world's top-selling automaker, says operating profit for the 3 months through June totaled 1.1 trillion yen, an increase of 94% from a year earlier. Toyota maintained its forecast for a 3.0 trillion yen profit for the current year, as the conditions it faced had not changed greatly from 3 months earlier. Toyota shares, which were up 1.15% just before the release of the earnings, extended their gains immediately after and were up 2.6% at 2,448 yen. Elsewhere, Australia's central bank held interest rates at 4.1% for a second straight month, saying past increases were working to cool demand, but retained a warning that some more tightening might be needed to curb inflation. The Reserve Bank of Australia largely left its economic forecast unchanged from the previous quarter, forecasting headline inflation would slow to around 3.25% by the end of 2024 and be back within its 2% to 3% target range by late 2025. The Australian dollar extended earlier declines to be 0.9% lower at $0.6660, and 3-year bond futures rose 8 ticks to 96.22. Finally, manufacturing sector activities in India moderated for the second straight month in July as rates of expansion in output and new orders eased slightly. The seasonally adjusted S&P Global India Manufacturing Purchasing Managers Index eased to 57.7 in July from 57.8 in June. Despite the fall, the Indian manufacturing sector maintained strong growth momentum at the start of the third quarter amid ongoing buoyant demand. Rates of expansion in output and new orders were only marginally softer than in June, with firms expanding their employment and purchasing activity accordingly.